Okay, so what I wanted to do was actually do a review for each individual tool because I know a lot of you are now using the DOP Pro Suite. So if you look below the video in the notes, what I have done is segment this video based upon which tool I am talking about with a time reference. So if you want to fast forward to a specific indicator, or if you want to go back and rewatch a portion of this, that is what that is for. So as you can see, we have the trade balance indicator up first. I want to talk about this first. I also want to point out we could talk about every day this week, and it actually would be a lot of fun because every day was different this week. We had some days we had a ton of volatility, and then we had today, Friday, where it just would sit in these zones for a very long time. And what I want to talk about is, first of all, I'm going to review this, but there's an element to this that you've got to drill in your minds. And the reason why is because it's very simple, and every single time you see it, there's a little phrase I'm going to give you, and you'll know exactly what to do, and you'll know what to expect. So, trade balance first. Beautiful movement. You know, we have this announcement that happened earlier, and the market really took off. You know, despite what a lot of people say, things are really going well economically in the United States. And so, as traders, you have to really try to separate all of the chaotic opinions on either side of the aisle when it comes to politics, because there's reality and then there is what some people are trying to say. And in my opinion, this is a great representation of reality. Things are going really well. So, that aside, let's look at the trade balance. So many trading opportunities in here. One of the things that you might want to consider doing is what I like to do is I like to use, if I'm not using prediction points, which I actually always do, but for those of you that may not be using prediction points, and obviously there are some markets, well, actually there's quite a few markets that prediction points currently are not calculated for, and so this is a great substitution tool. And so what that is, of course, is the retracement. So what we can do is, as we're still in the time frame of the trade balance, we can actually still use this, for example, as we hit highs, so our first 30-minute high was here. And so if I extend this over, we can see where the lines are at. Now you can see right here, we hit this 23% retracement. And we can take that for a small profit, come back up to this high that was set in the first 30 minutes. And as we hit new highs, we can always go like this, okay? So as we're coming back down from this high here, we can just redraw it. So a lot of times what I'll do is I'll have this drawn 2 or 3 or 4 times even as the market is developing, because as you can see, what it does is it produces very tradable levels. Now, as we get outside of the trade balance time frame, what we want to do is we want to put this on the greater portion of the market past that, because then we can use these price levels for entries and exits and profit taking as it's developing outside of the trade balance area. So one of the things that I've mentioned time and time again is to always watch for the fake. And so I guess in a way we had a fake because we came above and we came right back down, but I wouldn't really consider that what happened this day, that so much as it just coming back down to gain strength. So here's the phrase I'm going to give you, and this is something I remember 15 years ago. I wrote this down and I taped it to my computer screen, and what that is this: the longer the launch pad, the greater the launch. And what that means is when we have this, every single time you see this, get ready. Now, it doesn't mean the market is just going to shoot up 100 points, but what happens is you have this constant buildup, and this actually took almost 3 hours. We sat up in this range almost 3 hours. Now I'm going to pull up prediction points in a second, and we had some beautiful bounces, actually the entire day. But we just sat here and we can use the high of the bounce area as an entry. So as we're doing this, and once you get an hour into this and then 2 hours into this, man, it's time to take some action. Now we want to be prepared, because if we have a dip through down here, we want to make sure that we can get in on some long positions down here, but that never happened. And so what we want to do is we want to use this high of the balance area as support. We want to buy that, and or I would actually stress, and we want to buy breakouts, because we know that the longer the launch pad, the greater the launch. We don't want to miss that. So we want to make sure we get in on that. Now, this is painful to sit through for two reasons. One, because it takes so dang long, and two, because the movement, the range here is tiny. So if you have the patience, then obviously there's some simple things you can do, but sometimes it's not this small. Sometimes we have much bigger movement. So I think that's all I'm going to say about the trade balance, because it's very straightforward. If you've watched the videos, you should know exactly what to do. The great thing about the trade balance is it gives you trades every single day. So make sure you are using this. Don't overcomplicate it. It's very simple. The retracements I just deleted, those are entries and exits. Those are entry. When I say exits, that means that's where we take profit. So you can take smaller profits. You can, go for the larger targets, up through here. We can also test some shorts, just making sure that as we drop to the lower levels, and if we come back up, which we did, we want to get out, because we don't want to be up 2 or 3 points and then come back to our entry without taking that opportunity to take the trade-off. Okay, so that's all I'll say about that. Let's move on to the next indicator. Okay, so this one is called one price. This is a single price that populates an hour and a half before the market opens. And I'm going to show this one because it's part of the arsenal of tools that we can use. Now, Friday's one price formed all the way down here, and because the announcement was so good, the market just didn't even come back to test it. It reached it. So one of the strategies, there's 4 strategies that we can use with one price. The very first one is as a target. And obviously today, as we can see, it not only hit the target, but went way past it, which is a good thing. This one up here, so what happens is one price, any day that it's not filled, the line will continue until it does. And that's why if I pull up statistics, so I actually only have 22 or so days loaded. So it has a 91% fill rate over the last 22 days. As you go over the span of a year, on the ES at least, you're going to be anywhere between 96 to even 99% fill rate. And what that means, fill rate, just means that this one price level has been filled by the market. So in other words, it came back to fill it. And that's really what this price level is. It's a price level that says, hey, this price, this exact specific price, has a very high chance of being filled. And so that's what the analytics do, is it shows you a statistical performance of that. So this upper one was formed on the 2nd, and we obviously hit it, and it gave us another entry to go long as we broke and came here, which is one of the 4 strategies. So as a target, we won't talk about all of them here because that's not what this video is about, but we have a target, obviously hit, and then if we break and come back down to this level, that is one of the 4 strategies to enter long. So we'd want to be long right here. And we have plenty of other reasons to be long, but this is a tool that helps us 2 things. 1, where do we get long? And 2, because of this type of formation, it confirms that position. Okay, so let's go to the next one. Okay, so this is the box. I switched chart type because for the ES, and by the way, those of you that might be new to videos, what I have done over the last well, longer than a decade, is I stick with the same stuff, same charts, same pretty much everything because one, I want to show consistency, and two, I want you to understand that I'm not form fitting these. And what that means is that I'm not trying to find, well, let me find the best chart for today that looks the best. And so this way you can see that the tools that we use are extremely consistent. Okay, so this is the box. So this is probably, I mean, I've been doing this a long time. This is probably the easiest thing to use. It should not take you long to get the hang of this. A decade ago, when I first came out with this, I actually grabbed my 10-year-old son and in 5 minutes, I taught him how to use this. I said, when there's a blue arrow, I want you to click this button here, buy. It says buy. And if it's red, I want you to click sell. Okay, I can do that. What are these lines? Okay, these lines here, when you click buy or sell, the market's going to move. And then what I had him do, just because he was so young, I showed him where the flatten button was at. And so I left it up to him. When price gets to one of these levels, then click this button. Now you can let it go as long as you want, but these are what we call profit levels. Okay, so this is where we want to get out of the trade. That's where we take our money. So if we go all the way to the left, this is where Globex starts. We have this short. My crosshairs up here. So the very first profit level is blue. Now, these will shorten. So once a new box forms, these longer profit levels, they will shorten to the width of the box so that we can focus on the current box that has formed. Okay, that's why they're shorter over here. That way you don't have a bunch of long lines on your chart and it just clutters things up. This makes it much cleaner. So if we go all the way back here, the very first profit level is blue. We can see that it made it to almost the fifth one. Long, same thing, back and forth, profit. This one hits it -1 tick, but it does not break above, and we hit down past the second. This one breaks past the fifth. We do have this little bit of whipsaw here, but we have a requalification. Side detail, all that means is that if we break without qualifying for a short, which means we don't get an arrow, we're still long. So we still want to be buying. That's all that means. This one hit profit, this one hit profit, profit obviously worked really well. See, for me, the market opens right here. So this would have been the first trade of the RTH. Winner, 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 winner. This is your first loser. If you're still trading at this time, this was that long period where it just was sideways. So you're way up on the day, and then this is your first loser. And the good thing about this one is that it was tiny, so you would not have lost very much on that, and then a huge winner. So I don't even know how much, but it's very, even though the market moved very slow on Friday, very, very profitable. Okay, there's not much more to say about the box than that, so I'm going to leave it at that, but this is something that you just got to have. The most ideal times to use this tool is actually when the market's going crazy, because a lot of times traders are not used to having to react so quickly. You know, a lot of times we sit there and we're analyzing the market and then, okay, these are the tools I have to use. How am I going to get in? If it's moving fast, a lot of people get flustered. Well, with this, we're just looking for an arrow. Arrow, buy. Another, a red arrow, sell. And then you just take profit. Or you can actually preset your profit. So it really makes the whole job of trading much easier. Okay, let's go to the next one. Okay, so this next one is Backfill. And I'm actually not going to spend a lot of time on this because there's so much to this. But you can see I actually have squished, let's see, 1, 2, 3, 4 trading days really tight here because I want you to see from a bird's eye view this. And if you understand this, this is absolutely amazing. So the bottom line to Backfill is this. There's two components to it. Number one, you'll see vertical up and down bars that are either blue or red. Blue suggests buying pressure. So what that means is that right now, let me actually just show you an example just so you understand this. I'll just make this bigger. So right now, right here where my crosshairs are, or right here, when that is blue, it means we have buying pressure. So what we can do, there's so many things we can do. We can simply look for a buying opportunity. What do we have right here? Right now or somewhere close? Well, if we have a prediction point, or if we have a one price level, or if we have anything that we can look at to position ourselves to go long. Let's get long. Let's get long. When it's red, it means that there's selling pressure. So if we look through here, we're building up to selling pressure. So we want to look for a short position. Same through here. Now we're climbing through here, but there's still going to be buying and selling pressure areas. So that's the first component. The second component are the horizontal lines that you see, this one and this one. They're either going to be blue or red depending on what the market's doing. And to make it simple, if the market's rising, they're going to be red when they form, and when it's dropping, they're going to be blue. And the reason why is because there are orders left in the market as the market's going kind of crazy that will almost inevitably come back to be filled. Now, I'm not going to go into great depth on that, but if you want to look at the analytics on this, now I only have 5 days loaded. If we were to look at like a year, you're probably going to have about 1,600 of these horizontal lines that form, and you're almost always going to be 99% fill rate. And of course, just like with one price, fill rate means price comes back to fill that level. Okay, 99% fill rate, I would say that's pretty good. And that's one of the advantages of having analytics built into the tools that you use, is you get a lot of confidence with that. Won't break this down. It's not what this video is about, but I wanted to show you this because if we go back to that prior view, we can see over this roughly 4-day period how as the market's falling apart, so to speak, or running to the moon, doesn't really matter, because there's going to be, this is how the market moves. It's always going to go up and down. And so what this does is it gives us instant areas to look for different trading opportunities, period. So as the market's climbing back up, we just look to see, okay, well, we've got these prices way up here, and we've got buying pressure building up. Or, there's so many different things, and we could go on for 30 more minutes easily. But that's really just the bottom line. We've got vertical, up and down, buying and selling pressure bars, and then we have the horizontal prices that show us the exact price that the market, this is the ES, this will work on anything including stocks. Doesn't matter what you put this on, it will work on that. It shows us specific prices that this particular market is going to want to come back to fill. Okay, we'll leave it backfill at that, and let's proceed to the next one. Okay, and as you may have heard in prior videos, this is key turns, which governs all of my trading. So the simplest way to put it is that when price is above it, we want to be buying, and when it's below it, we want to be selling, period. Now, there is a detail, and that detail is overextension. There's no magic number. It just means that if price is above key turns, the key turns level, not a point, not 2 points, but if it's several points above it, it's probably going to try to make its way down to it, and vice versa. So if we look at the prior day, so right here, this is the prior day, we're well below it. So we do want to look for shorts, but we also want to be aware of this run up, because in most cases it's going to try to work its way back to this key turn level, because it's a very strong level that the market's going to want to test. So we had this announcement that was really good, and so as we were coming down, that data that came out with the announcement halted any attempts at lower. because it was so good. And the market just couldn't ignore that, so it just continued to climb the rest of the day. The day prior, basically the opposite, and you can see how it came up to it and tested it. If we look at another day, we can see that it worked its way. It actually missed this one by about a point or so. And then remember, buy above, sell below, we want to look for shorts. Okay, so we're going to be dominant short. And then we tested this. You can see how it, it worked its way down to it. It tested it. And so here's where we want to trade a breakout. And then as we broke down, it came back up to test it one more time. And this is the kiss goodbye. Beautiful, beautiful trades. I could go on and on and on about this. I've been using this for a very long time, probably 17 years, and every single day. And it's literally that simple. Buy above, sell below, always keeping in mind to watch for overextension. And that's it. Okay, and the last one is prediction points. And today, like almost every single day, was absolutely phenomenal. Price used every single one of these. Every single price here should have, those of you that use them, could have, those of you that didn't use them, been used to trade. I mean, at this point, maybe we should just sit here for 30 seconds in silence and just look at this chart because it's absolutely beautiful if you understand what's happening here. And the bottom line of prediction points is that on an intraday basis, the market is going to move. It's going to have these turning points. And what prediction points do, and the reason why they're called prediction points is because it uses a predictive model. That's why they're called that. And what they do is it predicts where these turns will be the day before the market even begins to move. And in simple terms, what's going to happen is the market is going to want to go from these blue lines to the next blue line. And in the interim, it's going to use the orange lines to get there. So the blue lines end up being targets. The orange lines end up being interim targets that we can use to scale out of positions and then to get back in position. And the process of using prediction points is so repetitive. What we're doing is we're getting in on every single one of these and we're watching for how many times they get hit. The reason why we do that is because, one, as you can see, they're highly reactive, and so it makes sense to trade them. And we know at some point the market's going to want to continue higher or lower. So as it keeps hitting these levels, we want to watch for those breakouts and those breakdowns. And then when that happens, we're simply targeting the next level. So earlier, when we were talking about the trade balance indicator, look at this. This long period that was almost 3 hours long where we sat here. Yes, we did have the trade balance high, which it actually missed it by a tick, but look what else we had. We had this blue line here that gave us multiple chances to get long. And like I said earlier, an hour and 2 hours into this, we know that what's building here is a launch pad. Where do we want to get long? Well, we want to get long off this guy. We also have the high of the trade balance area as a confirmation. So everything just played out perfectly regardless of what tool you're using. Didn't matter if you used Backfill or if you used one price or if you used prediction points or the trade balance area or the box. Every single tool pumped out cash. And even though the market was slow and really boring at times, Friday, October 4th should have been a highly profitable day for every single one of you using any one of these tools or all of them. If you don't have all of them, there's a link in the description for the Pro Suite. And if you enter that code, you can get $1,000 off the Pro Suite, which is expiring soon, so I would hurry and do that. Now, prediction points are not part of that, but there's also a link there where you can access these prices, and there's currently 10 different markets that they're being calculated for. In a little while, I don't have an ETA yet, but in the process of building an indicator that will actually run any market you put this on, which I can't tell you, it was November of 2007 that what you're looking at was finalized. And the code has been the same ever since. It has not changed, and it has been just as accurate as you're looking at over all these years. So this November, just next month, is going to be the 12th year anniversary when I first discovered and created prediction points. And I just can't wait for this version to be done, because you'll literally be able to put it on anything that you can chart, and it will give you these price levels. And then lastly, those of you that are interested in the map service, what we do with that is it's a message board, and you'll get a series of messages that will help you navigate this. So you'll get these prices, and then you'll get real-time commentary on what we're looking for, and specifically which of these prices we're looking to do what at. So we'll leave it at that. Click one of the links below and get started. Again, that discount code is going to expire really soon, so make sure you grab that, and you can start using these tools, those of you that don't have them yet, on Monday, and we'll do it all over again.